Welcome to the Tough Decisions Network. This is your tip of the day. Be sure to visit toughdecisions.net to sign up for our free weekly entrepreneur email, where we send you news about the latest technology for your business, inspiring quotes, and the latest entrepreneur books. That's toughdecisions.net. Before we get started, let's hear from one of our sponsors. Have you ever thought about investing in real estate, but find yourself so busy that you don't have time for it? Do you have FOMO, which is the fear of missing out? At HanfordCapital.com, we help investors with passive real estate investments that project better returns than traditional investment vehicles such as the stock market. If you'd like to find out more about our passive real estate investments, visit HanfordCapital.com. That's HANDFORD capital.com. We will jump on a call with you to discuss your investment goals and to see if our investments are a good fit for you. This advertisement is not to be construed as an offer or recommendation to buy or sell a security. Visit HanfordCapital.com. On today's daily tip, I wanted to talk to you a little bit about starting a business and one thing that you should always keep in mind when starting a business, and that's the exit strategy. So I have a friend of mine, and we were sitting down talking about a business that we wanted to get started to add to my portfolio of businesses. And I sat down and I was like, we need to make sure that we're looking at the exit strategy. I don't want to create a business at this point and not have some sort of an exit in mind. And it's also a good idea to think forward enough to think about how big and how much you have to scale your business to get to the point where you can actually sell it and exit it properly. And in order to exit it properly, you need to set it up in a way that allows you to be able to do that. So always keep that in mind. And again, it's also a good idea to have in mind what is the type of person or other type of business that you could sell your business to. So if you're going to have the exit strategy in mind, also have who is going to be the person that is going to ultimately buy your business. And that will allow you from the very beginning to be able to stage it into a point to be able to sell it and exit it at the highest price possible. And so when you're thinking about who's going to buy it, I'm talking about thinking about, is it going to be some sort of a venture capitalist firm? Is it going to be another private equity group? Is it going to be a group of other business people? Or maybe it's another business that your business that you're going to start would go really well with that other business and go hand in hand and really complement that business. So when you start a business, keep that in mind. Always think about the exit strategy and always think about who are you going to sell your business to. And you should do the same thing when you're trying to buy real estate or any other type of, investment. You should think about the exit strategy. There's a piece of property that I'm looking here in my hometown, and I decided not to go forward with it and purchase it because I really didn't see an exit strategy. It was going to take too much effort and energy to try to exit it, and I really couldn't think of the right buyer for it. And so I wanted to make sure that I can buy property that I can easily exit whenever I'm ready to exit. And you should do the exact same thing for your business. So that's it. That's the daily tip for the day. Hope you enjoyed it, and I'll see you again on another daily tip. Thank you for listening to the Tough Decisions Network. Visit toughdecisions.net to sign up for our free weekly entrepreneur email. That's toughdecisions.net.